If you are a pullback trader, or you are new to pullback, or you want to trade pullback specifically, then this video is for you. In this video, I'll be discussing the two types of pullback that we have in the market and the best kind of pullback you should consider trading, and the one that I personally trade. I'll be demonstrating this practically in this very video in detail, and I'll be showing you practical example on price action as well, so that you know the pullbacks that work and the one that have most likelihood not to work. That is the one you should not always consider trading. All of these and many more in this very video. So pay attention and watch this video all the way to the very end. The first thing here is the types of pullback that we have in the market. We have two types of pullback in the market. That means every pullback you see in the market is categorized into two categories. And the first one is what we call the aggressive pullback right here. And the second one is the corrective pullback. So pullbacks are in two categories. The first one, aggressive pullback, and the second one is corrective pullback. So either you are trading pullback of any kind is categorized into these two. And I want to demonstrate practically what aggressive pullback is and what corrective pullback is in this very video. So practically, let's say for example, market is moving all the way to the upside. So let's say from here, I pick these two and market was moving all the way to the upside. We see market move upward and we see correction all the way to the downside. We see market move upward. We see correction all the way to the downside. We see market move upward. We see correction all the way to the downside in this formation. Now, in this very formation, you can say that market is aggressive or corrective, okay? Depending on the momentum that the market is using to come back down. Let's say, for example, when market was correcting at this very point, at this very area, if the market is correcting with big, strong, bearish candle, then that is aggressive pullback. And if it's correcting with little smaller bearish candle coming back down, mixture of bullish candle and bearish candle, but the market is coming back down, that is corrective pullback. This area as well is still the same thing, depending on the kind of strength in the candle formation coming all the way to the downside. Example as well, this area as well is also a corrective or aggressive pullback, depending on the aggressive nature of the candle coming all the way to the downside. Now, here is the trick. One more important thing here is that if you have the same scenario, let's say for example, market is coming all the way to the upside. So we have this very upward move, market move all the way to the upside, make the first move, and the market move a little bit, move upward, then come back down, okay, before it move again, come back down, move upward, come back a little bit to the downside before the next move again, okay? So market is moving in this kind of formation is a complete corrective pullback. This is very important. You need to pay attention to this. Now, when I see this kind of pullback in the market, it gives me satisfaction, especially if I see the market has corrected 50 to 60%, that is into the golden pocket of the Fibonacci 2, then it's a good point to take your trade. Now, let me explain further. Market moved from this very area into this very point, and then we see this first correction, and the market move a little bit to the upside as if it's going to move upward, then it corrects again. Now, right here, I want to determine the strength of the candle moving forward, because at this very point, if it has retraced 50-60% into the golden pocket of the Fibonacci 2, then it means that this correction have come to an end, that the market is going to have the next impulse all the way to the upside. So from here, I'll be looking for a buy opportunity all the way to the upside in this very formation. So this is very important. This is an example of a corrective pullback, which is very, very important. The same thing, if the market move this much impulse all the way to the upside, and then we have the first correction, market do as if it's moving upward, and then come back down again, create a new low, lower than the previous low at this very point, and then have seen 50% to 60% retracement, or the golden pocket of the Fibonacci 2, then I'll be considering this a good point to look for entry point for market to move all the way to the upside. What that means is this very correction that we see right here is a corrective pullback, and this very one is a corrective pullback. That means in the market, when you have this kind of formation right here that occur at this very point, it can be corrective or aggressive depending on the kind of candles, that is the momentum in the candles that is coming back down. It can come back down just once without having this very structural formation, and it can come back down just once right here without having this structural formation. So I want you to look at the market in this perspective, and when you are looking at pullback, before you take any trade, look at the strength and the momentum in the pullback. Very, very important. With this setup and with this knowledge, you'll be able to identify that the pullback is coming to an end and that the impulsive move is going to come into the market either very soon or immediately. And this is what you must have to pay attention to. Very, very important. And the same apply when the market is coming all the way to the downside. Let me just give one more example in this very regard. Let's say market is coming all the way to the downside. Market come back down, we have retracement right here. Market come back down, we have retracement right here, or correction, and then come back all the way to the downside. Or we can still have market move all the way to the downside, and then we have correction, market do as if it's coming back downward, correct again into this very point before the final move to the downside. A market correct, come back down, correct again, and then the final move all the way to the downside. All you need to do to find out the point where this correction is coming to an end is to first of all determine the momentum the market was using to moving all the way to the upside. So in this very case right here is a corrective pullback. This is a corrective pullback. This one right here can be corrective or aggressive depending on the strength of the candles moving upward. That is the bullish candle moving upward. The same thing here as well. It can be aggressive or corrective depending on the strength of the candle moving all the way to the upside. This is very important because momentum is very important, and once momentum begin to die down, when market is correcting, then it means that it's a good time to look for an entry opportunity for the market to begin to come all the way to the downside. This is a very important thing you must have to pay attention to be in the right direction of the market when you are trading pullback. And if you are new to pullback trading, this is how you should understand pullback trading and scale up your trading all the way to the next level if you are beginning in pullback trading. And if you are an advanced pullback trader and you've not been trading in this kind of way, begin to look at this perspective and look at pullback in this directional bias so that you be in the right direction of the market 80 to 90% of the time. If you look at this price action here on USDJPY, which is very important, you see that the market from here moved all the way to the upside. This was a complete impulsive move all the way upward. But what happened to the market? Market correct a little bit, and then we see a pause right here as if market is going upward, and then we see another move all the way to the downside. At this very point, market did not create a new low, but market come back down about 80-90% of the time, and then come back all the way into this very point with this very bullish candle right here. Is a confirmation that this market is going to begin to move all the way to the upside, and the pullback have ended, and the market is going to make the next impulsive move all the way to the upside. We see the market move upward, come back to the same point before the final move all the way to the upside. Of course, market will not just move all the way upward. Market can move upward, come back to the same point before the final move to the upside. That is why I always advise when taking this kind of trade, your stop loss obviously should always be below this very level of support right here at this very point for a buy opportunity. And another example here is this market move all the way into this very point, and then we see market just move all the way downward. Now in this kind of formation, it seems as if it's an aggressive pullback, but it's not an aggressive pullback. Is a corrective pullback. Why? Because if you look at the strength of this very bearish candle moving all the way to the downside, it is covered that this very bearish candle here does not have strength. Okay, if you look at the way market move all the way from here to the upside, compared to the way it's coming all the way to the downside right here, you discover that the market does not have strength. And of course, if you look at this very point, you discover that this market right here does not have strength as well, which also point to the fact that we should know that the market is about to correct, because for the fact that the market did not have strength right at this very point moving forward is an indication that the sellers are about to take control of the market, and we see them take control of the market from this very point and market begin to move downward. Now, one thing very important here is that the market did not also have strength moving downward from the base at this very point. That is why you need to pay attention to the momentum of the market to concretely determine if the market has strength or the market does not have strength, that is momentum, before the next move all the way to the upside to target your entry point after a correction or pullback, which we normally see in the market. So in this very case, this is a corrective pullback all the way to the downside, market move, and then we have this move, and then from this very area we see this move all the way to the upside. One thing I use as an entry signal is I want to take note of the last bearish candle. First of all, take note of the last bearish candle. When you see the market go below 50, 60% to 70% of the last impulsive move, once you take note of the last bearish candle, for example, in this very case, this last bearish candle, and we have another last bearish candle here before this bullish move, consider the next bullish candle to go above the last bearish candle. Look at it right here. If you look at this very bearish candle, market did not really go above it with this very bullish candle right here, but this very bullish candle right here go above, that is, it closed above the previous bearish candle, which is this very bearish candle right here. Now, this indicates that the market have come to an end. Okay, potentially, that is the possibility of market coming to an end at this very point is 70%, and you should prepare for an entry. If I were you, at this very point, I'll be preparing for an entry position from this very point all the way to the upside. Now, you can apply this step and this trick on any time frame, any pair in the market. So from here, market is going to move all the way to the upside. Now, if you look at this very point as well, you discover that the market does not really have momentum and it did not close above previous bearish candle. But at this very point, we see bullish candle that closed above previous bearish candle, which is an indication after we see this 50, 60 to 70% retracement or correction, the market is going to begin to move all the way to the upside. This is an important tip that if you apply right now on your price action, is going to make your trading skill all the way to the upside. Euro USD 4 archer, the same pattern occur right here where market was coming all the way to the downside right at this very point. We see market come back down. We see this retracement or correction, come back down again, retracement or correction, then come back down again. You can notice something very obvious here is that this very point does not have strength. This very point does not have strength. It all lacks momentum. While market was creating new lows at this very point, then market was also creating new highs at this very area. However, what we are focusing on is the strength of the retracement. If you notice, the strength of this retracement is very poor. The strength of this retracement is very poor. So from here, we can say that market have capability of coming all the way to the downside after this very correction right here, this very correction right here. So in this very case, this is a corrective pullback right here, and this is a corrective pullback right here. So conclusively, the best kind of pullback that you can trade right now on your price action and you should be looking out for is corrective pullback. It's very interesting for you to be trading corrective pullback than aggressive pullback, because when you trade corrective pullback, you have the opportunity to enter at the right time. Not only that, because of the dull momentum coming all the way to the downside, in the case of an uptrend, it will give you that sense that the market is about to move all the way to the upside. This is very important, and that is the kind of pullback that I trade on my price action. Why I neglect or give less attention to aggressive pullback on my chart. I hope you gain something from this very video. Consider supporting this channel by leaving a like for this video, subscribe if you haven't already, and turn on the bell notification for more Forex videos like this one. Also check the channel for other Forex content. Join our Telegram channel, the link in the description of this very video, and also in the pinned comment, it is a free channel. Link below, join right now. And if you want to watch my other videos on the channel, check this video out and check this video out as well. It's going to help you a lot. Thanks for watching, and I will see you in the next video.